Okay, folks, so we have three violent things to discuss. Number one, an update on the economy and what is going on. Number two, an update on Red Boxy Box, which was back with a vengeance today, up over 100% at some points. What is going on and what should you know? And then finally, if you have been following the monkeypox situation, and haven't seen some of these trades go absolutely parabolic, well, you're going to want to watch the end of this video because we're going to be breaking down exactly which are the plays that are likely to continue running, which are going to have other legs of momentum cycles, and so on and so forth. And to quote the great Oracle of Omaha directly, Mr. Warren Buffett himself, well, he once said that whenever Charlie sees opportunity in a stock, you better get your short positions ready because that shite's going down. But anyways, let's go ahead and get to work. Timestamps below. Okay, so pretty flat Monday heading into a pretty damn big week. The big earnings reports really start tomorrow and into Thursday, as we talked about yesterday, and the Fed rate hike decision comes on Wednesday. And perhaps even more interestingly, the next GDP report comes out on Thursday, which the Atlanta Fed's calculator right now says is likely to declare us in a recession. However, PSA, luckily for us, the White House may actually be taking some pretty damn aggressive action to prevent a recession from hitting us. They just published a press release redefining what a recession actually is. Arguing, quote, it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter, indicates a recession. Now that may sound like an oxymoron. Everybody knows that a recession is 2 consecutive quarters of negative growth. According to Patrick Mullane, the executive director of Harvard Business School Online, a recession is formally defined as 2 quarters of negative GDP growth. And this is important to note because this is the traditional definition that government data, Wall Street, journalists, academia as a whole have been using for a so-called recession for much of the last 100 years. I got my bachelor's degree in economics, and I remember freshman year of Econ 101 on the very first day. They defined recession, and this was the definition. But I must have missed the day where they said, oh, you could actually change the definition as you please. And I went to UC Santa Cruz where half the professors came higher than the CPI report. The White House now insists that the definition must be changed to be more holistic because applying the same data that has been applied to previous administrations over the last 100 years and applied to every other economic situation over the last 100 years is just too unfair. Why not let the government use a holistic process that allows them to pick and choose the data that paints a picture that they want you to see instead of one that actually is the reality? If you can't avoid a recession, why not just change the definition of what a recession is? I mean, hey, they're already doing it with inflation. Might as well do it with everything. As Gandhi once said, if you can't fix the problem, just redefine the word problem, and the problem is solved. I can already see the press releases next year. Yes, we just came off 6 contractionary quarters. But holistically, the president feels like we're doing pretty well. He just had a nap, which means Americans have a lot of leisure opportunity. And that means they have a lot of extra money and they must be doing good. That's called holistic analysis, folks. Look, folks, I'm not the type of person that blames one guy that's been in office for like a year and a half for all of society's problems. But folks, does this guy not know how to help his case? I mean, when you see all this misdirection, number one, oh, we have the fastest growing economy in the world, and CNN finds it as false. And then you also have the infamous statement a few weeks ago where the White House is like, hey, the economy is the strongest in history. And then now they're coming out and saying, oh, well, you could see 2 contractionary quarters in the overall strongest economy in history. But, if you look at it holistically, which means take out all the bad parts, then, well, we're not in a recession. Oh, a recession isn't really a recession. It's actually an expansion in disguise. Just remember that when you lose your job at the end of the year and you got to pay $5 million for a Pop-Tart and a biscuit. Next, I want to talk about Redbox, Mr. Red Boxy Box. What is going on? Now, I told everyone this year would be the year of the resurgence of DVD rental. And eventually, maybe next year or the year after, you're going to see the big return of the VHS. And we are going to get into that in a second, but first, a word from our sponsor. Moomoo and their exclusive 10 free stock promotion that ends at the end of the month. Are you looking to step your trading game up to the next level? Well, you'll need all the best resources in order to do so. Moomoo is a trading app that allows you to invest in stocks, ADRs, ETFs, and options worldwide. Their trading app is designed to help you find stocks faster than ever before. It has a cutting-edge stock screener with 100 plus stock indicators to locate just the right investments that match your strategy. It has a feature called Stock Compare, which allows you to compare multiple stocks side by side across key dimensions such as price trends, price to earnings ratios, and 30 plus indicators. You can review the top buys and holding lists from more than 10,000 asset management companies such as Berkshire Hathaway or Soros Capital Management. They have free, real-time level 2 data, which is essential for active traders who need to see a more detailed order book of buys and sells. They have 24/7 premium news and alerts for free. This includes unlimited access to real-time news from leading financial media, curated lists of market highlights from Moomoo's editorial team, and all-in-one market calendar for key events. Overall, with Moomoo, you get a convenient and more powerful trading experience with extended trading hours, easy access to global markets, and fast trading execution. And of course, all of this is under one account. Make sure to give them a look. They'll give you up to 10 free stocks valued all the way up to $2,500 when you use our link in the description below. Thank you, Moomoo, for the sponsorship. Now back to the content. Okay, but back to Red Boxy Box. So you had a run 100% plus at highs today, and I was pretty surprised to see this come back onto the scene. Shorts have been covering pretty steadily since the overall rallies died off, and it was my view that the risk didn't really make much sense on this because, well, guess what? You have that chicken soup for the soul acquisition looming over the heads of investors, and that could be completed at any point in the second half of 2022, which we are now in. And of course, the acquisition price is way below the current Redbox share price. But you still saw some pretty insane running today, and what I would cite as a reason for this is just the sheer lack of liquidity combined with shorts continuing to try to cover all at the same time before the acquisition goes through. As of the last week, you're starting to see play after play that's not running up on speculation of a squeeze, but is actually going down, and then all of a sudden you have a day where it goes up massively, and that's because shorts are actually covering. So now you've gone from speculation on a short squeeze to now actual short squeezes, as shorts are all trying to cover at the same time, and it's just not working liquidity-wise. Obviously, you look over at the Ortex data, you can see a pretty damn big exodus of shorts the last couple of weeks. And all of a sudden what happened today, well, you had too many trying to get out at the same time, and you didn't have enough liquidity to fulfill those covering, because when you cover your short positions, what do you do? And you're buying shares. And when you're buying shares, what are you doing? Well, you're chasing up the available float, and when you're chasing up the available float, vroom, prices go up, and retail traders see that, and they're like, oop, we better buy, cha-chinga, 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 and then do-do-do-do-do-do-do. Next, I want to go over to the monkeypox trade, Over the weekend, the WHO announced that it views the monkeypox outbreak as a global health emergency. The continued spreading has prompted governments and other organizations to start stacking up on potential mitigation measures, and has prompted companies to start thinking about what vaccines could work. Mostly it seems like the smallpox vaccines are very, very effective at monkeypox, so everybody's trying to speculate which company has the most relevant smallpox vaccine and which one can produce the most and profit the most off this overall trend trade. If you follow our daily morning briefings in ZipTrader you know that a lot of the pox trades made it this morning to our list, and I see several of them as being increasingly relevant moving forward. Here's my spreadsheet on that, my raw spreadsheet. Keep in mind, a lot of these stocks we've talked about before. We talked about them back in May. We talked about them as the monkeypox trend trade emerged and then disappeared and then emerged again. And generally speaking, any kind of trend trade, not just a monkey trend trade, tends to move in legs. You get a leg of hype, and then a leg down, and then a leg of hype, and then a leg down, and so forth. And then you go for the thighs. But you got to be careful, because on the days of the biggest runs, you tend to see a leg down very, very soon, and then after that, you get the next momentum cycle. So keep that in mind. If you're going to play any stock that we're talking about on this list, make sure that you're seeing some bare minimum proof of concept. Make sure that you have clear entry and exit plans, and make sure that you have, well, an overall plan for your position before you even mess with it. So GovX, we briefed on this one this morning at about 110-ish, and it ran to 186, which was solid, but overall it was up 150% on the day and was kind of the leader of the monkeypox plays, at least in terms of percentage running. This is a $20 million hype biotech vaccine stock. $20 million in company valuation is absolutely nothing, which is a big reason this ran so much today, because it didn't take much capital to rally it up. If you have some sort of massive new outbreak coming and people are worried, well, that's $1 billion spec trade. $1 billion spec trade, even if just 1% of that goes to chasing a company like GovX, all of a sudden you get some massive runs. The company's CEO said its shot may stop transmission of monkeypox, a shot based on previously existing smallpox vaccines. The stock also has a history of rapid pumps and rapid dumps on monkeypox hype. Now, in terms of crucial resistance levels, you have your May cycle high at 337, which is still a moonshot away, but you also have your previous cycle support we were fighting to stay above just today. And I think we might declare that heading into next week. Remember, old support becomes new resistance when you break through it, and if you want to see the next leg up, GovX needs to actually hold that. And there's no options on this, and the short interest is so low, it's pretty much irrelevant. I don't think it's very easy to find shares to short on this right now. The stock is micro cap and doesn't have a lot of that big liquidity that bigger players, or at least slightly bigger players, have. And so you're not seeing a lot of institutional players try to crush this, which is causing a pretty easy run for folks who are playing it. Keep in mind, on the flip side, it's also very, very easy for this to turn against you and people start taking in profits because if you don't have enough liquidity to fulfill the sell orders, boom, you go down fast. Then you have SIGA, who is quite the diva. She's probably the queen of the monkeypox trade and the least hypey. We've talked about her before, but this is a $1 billion company that sells pharma solutions for antiviral smallpox. Why does she not run as much as GovX when she's the super queen of the monkeypox trade? Well, because her starting point is so much higher, right? $5 million chasing a $20 million stock versus $5 million chasing a $1 billion stock is a much, much bigger difference, right? In terms of how much the price goes up, in terms of the percentage gain. But SIGA also has the advantage of actually being on an overall uptrend because, again, she's a lot less of a sketch play. The reason it's not as pump and dumpy as something like a GovX is because SIGA is a legitimate and proved player in a broader sense. I don't want to say completely broad sense, but definitely a broader sense. Her smallpox drug is FDA approved in the US for use in smallpox, but it's also approved, and this is crucial, it's also approved as an oral treatment for monkeypox itself in the UK and Europe. And so you have a lot of speculation that, hey, wait a second, presumably there's a chance that because the US already FDA approved it for smallpox, maybe they're also going to FDA approve it for the monkeypox here in the United States as well, which means, of course, future catalyst potential. Call option concentration is centered around the $15 strike prices, suggesting some pretty extreme surprise at the rapid pickup in prices. I don't think a lot of people were factoring in SIGA to run this far, and I think it was mostly who induced why it actually ran, so explains that. Now, if you were watching us back in May, we were reflecting on the original SIGA trade, and it had done a nice run from our $9-ish briefing price to $15.49, and then the next day it hit 17 or something at highs. But ask yourself, what happened after that? Well, the next leg happened and those thighs weren't too nice. It went down and tanked like a dog. And a couple days later, you got another near double. The point that I'm trying to make here is that when you're talking about a speculative trend trade, does this look like something that you'd want to buy and hold? No, 100%. You want to be a trader when it comes down to spec plays. Spec plays are only fun because they can run and they can run massively. But if you decide, oh, I'm just going to buy and hold it, hey, you're going to end up getting destroyed. On this one, you've seen an overall uptrend. On many others, you'll see an overall downtrend. When you're attacking a spec play, you have to make sure that you have a clear entry and exit plan. Next, you have BVNRY. This is an off-exchange ADR based in Denmark, aka it's not listed on US exchanges, but they said they won European approval to use their Immunvax vaccine for monkeypox. Keep in mind when it comes down to ADRs, you want to be a little bit careful because sometimes you will find some liquidity issues that make it very, very difficult to get in and out as fast as you'd want to. So if you're not finding the liquidity or available volume that you need, just avoid it. CMBX, they make a drug used to treat smallpox, which presumably is going to be effective against monkeypox as well. At least that's what speculators are thinking. And the potential catalyst for this is you have the FDA pursuing an expanded protocol to test it against monkeypox itself, and perhaps they come out with an approval or some sort of emergency use authorization for this drug, and that causes a future rally, which is another reason why you're going to want to watch this one and keep it relevant on your radar. But anyways, folks, as you know, I love trying to find the hottest spec plays out there. And this has been a pretty damn hard year to find any sort of spec play that wants to run and stay up. But even in the best of market conditions, I don't necessarily think that everybody should be playing spec plays. No, these aren't fundamental plays. These are for folks who love the game of, oh, how do I manage my risk? Oh, how do I plan my entry point when you're starting to see that proof of concept? How do I take advantage of market psychology to lock in my run and then just go home with a lot of bags of cash instead of a bag of useless stock? One example that I do want to leave you with is TBLT. This is a stock that we briefed on Thursday and Friday morning last week because it had a very strong momentum setup combined with outsized volume at the same time, where short interest was ripe to suggest a short squeeze, and it ended up actually squeezing into close on Thursday and Friday. It went up around 80% from our original briefing price. Obviously, really strong win, and not every day you're going to find something huge like this, but it was a strong win. But even that said, what happened today? It dumped 25%. So it's like, hey, well, on one side, if you traded this and you caught even half the move from last week, you did great. But for a lot of folks that have a focus on just buying and holding everything that's running, well, you end up just losing all of your money when the hype run is over. There's nobody out there, folks, that says that you have to settle down, get married, and have 50 years of committed relationship with the stock that you're trading. At least if you get divorced in a marriage, you only lose half your stuff. When it comes down to holding a small cap gap, you could lose everything. Please, folks, if you're going to trade something, stop marrying it. And if you're going to marry it, please have a prenup that says, oh, if it goes down to a certain amount, I'm going to sell the hell out and go home packing. That caps off the video. Thank you again, Moomoo, for sponsoring us. Link down below. Make sure to get your up to 10 free stocks before the end of the month. If you're looking to join us in ZipTrader U and get our step-by-step lessons, private chat, daily morning briefings, and of course, full price target list, I'll put a link to that in the description below. Have a good rest of your day, folks, and I'll see you in the next video.